This is TradeFlow News, bringing you relevant news and insights from around the world. TradeFlow News, enabling trade for SMEs and economies worldwide.
These are some of the key topics that we will be looking into in today's program.
First, let's take a look at the overnight headlines which are impacting the commodity markets.
Oil prices rose on Thursday, after 2 days of declines, as a larger-than-expected draw in U.S. crude inventories provided some impetus for investors to buy futures while they monitor developments in Venezuela. Brent crude futures climbed 24 cents, or 0.40%, to $60.20 a barrel by 0343 GMT, while U.S. West Texas Intermediate crude was at $56.21 a barrel, up 22 cents, or 0.39%. Both benchmarks fell more than 1% for a second day on Wednesday, with market participants expecting ample global supply this year, including analysts at Morgan Stanley, who estimate a surplus of as much as 3 million barrels per day in the first half of 2026.
U.S. crude oil stocks fell while gasoline and distillate inventories rose last week amid busy refining activity, the Energy Information Administration said on Wednesday. Crude inventories dropped by 3.8 million barrels to 419.1 million barrels in the week ended January 2, the AIA said, compared with analysts' expectations in a Reuters poll for a 447,000 barrel rise. Crude stocks at the Cushing, Oklahoma, delivery hub rose by 728,000 barrels in the week, the EIA said.
Moving on to the top news in the energy sector.
The U.S. needs to control Venezuela's oil sales and revenue indefinitely to stabilize that country's economy, rebuild its oil sector and ensure it acts in America's interests, top U.S. officials said on Wednesday. The comments reflect the importance of crude oil to President Donald Trump's strategy in Venezuela after U.S. forces ousted the country's leader, Nicolas Maduro, in a raid on the capital Caracas on Saturday. We need to have that leverage and that control of those oil sales to drive the changes that simply must happen in Venezuela, U.S. Energy Secretary Chris Wright said at the Goldman Sachs Energy, Cleantech and Utilities Conference in Miami.
President Donald Trump plans to import previously sanctioned Venezuelan oil into the U.S., tearing up the global energy playbook and underscoring the seriousness of the administration's ambition to dominate the Western Hemisphere. China may be the ultimate target of this Donroe Doctrine, Trump's rebranding of a 19th-century doctrine that asserted Washington's zone of influence in the Americas. But U.S. oil companies could become the unintended casualties. Caracas has agreed to export up to $2 billion worth of Venezuelan crude to the U.S., Trump said on Tuesday. This was just days after the U.S. ousted Venezuelan President Nicolas Maduro and began demanding that the Latin American country open up its energy industry to American oil companies, or risk further military intervention. Next, we have the top news in metal markets. Growth in the artificial intelligence and defense sectors will boost global copper demand 50% by 2040, but supplies are expected to fall short by more than 10 million metric tons annually without more recycling and mining, the consultancy S&P Global said on Thursday. Copper has long been used widely across the construction, transportation, tech and electronics industries as it is one of the best electricity-conducting metals, is corrosion-resistant and is easy to shape and form. While the electric vehicle industry has lifted copper demand the past decade, the AI, defense and robotics industries will require even more of the metal during the next 14 years alongside traditional consumer appetite for air conditioners and other copper-hungry appliances, S&P said in its report.
Nickel plunged on Thursday, snapping a sharp rally since December, after the Indonesian government refrained from disclosing its 2026 mining output quota, raising concerns about a rollback of supply curbs. The most active nickel contract on the Shanghai Futures Exchange closed daytime trading down 6.14% at 136,440 yuan, $19,538.32, a metric ton, after plunging as much as 7.96% to 133,800 yuan. The benchmark 3-month nickel on the London Metal Exchange fell 4.05% to $17,170 a ton, as of 0700 GMT, after posting a 5.92% dive to $16,835.
We will now look at the top news in the agricultural sector.
Indonesia will likely increase its palm oil export levy to support the country's biodiesel mandate, Energy Ministry official Eni Listiani Dewey told reporters on Thursday, citing tightening funds. Indonesia, the largest palm oil producer, has implemented a mandatory 40% palm-based biodiesel blend, known as B40, the highest blending rate in the world. It seeks to increase the blend to 50% later this year. Indonesia subsidizes its biodiesel program using proceeds from palm oil export levies, which are currently set at 10% of its monthly reference price for crude palm oil, with the levy on more refined products ranging between 4.75% and 9.5%.
That is all for today's news on commodity markets. Stay tuned to TradeFlow News as we continue to provide you with more updates. We also invite you to follow us on Twitter at TradeFlow News, which allows you to watch our program on your mobile device or desktop to receive information from there.